Hello and welcome to the Friday wrap up brought to you by David Gokhstein and the Gokhstein News Network. I'm your host, Landy, and today is January 9th, 2026. And we're going to look at Bitcoin today to start things off. We will take a look at a few other things as well. And Bitcoin kind of hit the areas that we were talking about on, Monday and Wednesday. So we had the Wednesday move down, to kind of tag and close right on the low of Tuesday. And, the next big area was essentially 89 to 90. And we have now seen that area hit. And, right around the basis band, if this area is lost, I would expect Bitcoin to test down to the consolidation low side structure anywhere between 87,000 and the actual weekly closing lower high structure at $86,000. Now, of course, 89 being the inflection point between these two weeklies, between 86 and 93, that Bitcoin just can't seem to escape on the daily. Swinging above and below, getting, a couple, close open down here below, close open up over top. But realistically, nothing has happened for Bitcoin's price action in quite some time here. Let's go ahead and actually see if we can't measure some of that out. Forgive the kids in the background. Let's see. We've been down here for, well, we're looking at 55 days. So coming up on 2 months. And it's kind of boring, right? Now, this is a trader's market at this particular moment. So there's not a lot to do for investors in this area. If you are buying weeklies on the downside, you likely already got in this area. And if you were lucky, maybe even when it breached down to hit the weeklies down below here, right around $80,000. But, there's not a lot to do for Bitcoin outside of, trading if you're a trader. I suspect, that many aren't. I know there are a few of you that watch this content that are traders, but, it's kind of a hurry up and wait game. Bitcoin is loading up, in my opinion, on the weekly for a move up. It's just a matter of if it comes from here or if it, heads down first to test a low, maybe even lower, that 80,000 to 78 and possibly even lower before a sustained weekly upside move. I do think that is on deck, though. Just a matter of, waiting some more here. And for the daily, it's pretty easy to see the criteria for expansion again. And that's going to be, reclaiming right around 91.5, 92, and take it $2,000 at a time realistically, 90 to 92, 92 to essentially 94, which would put Bitcoin up over the upper second, but then its expansion into the high side structure again, right? We didn't get any closes above the 94,640, although we did get a strike at the 94 to 96 range with right around $95,000 on a lot of derivative exchanges. But spot price coming in just shy of 95. So kind of splitting the difference on that high between our zone of interest between 94 and the point of control up here, the most volume traded price at right around 96 or just there above. And if Bitcoin does, crack back above 93.5, I would look right to 94 to 96 again and then right back to 98 to 101. I know I'm a broken record. But I'm sorry, 98 to 101. And then, just slightly above there, we've got the big weekly overhead zone, and kind of the major areas to pay attention to there, at least right off the bat, are going to be 102.5 to 103.5. And then we've got, essentially 105 and then 107 to 108 and then 112. You can even throw 109 in there, but if Bitcoin does start to push up into that area, we'll do quite a bit of talking about that. To the downside, Bitcoin's lower second standard deviation skating across the lows here, right around 85, 300 or so. So if Bitcoin does fail right around 89, especially on closes, just like over here where we saw 89 getting tested over and over, and the swings above into 90,000, 90,500 in through here. It's really all about closes for me. If the condition is met of breaching below right around the upper $88,000 to $89,000 area, I would be looking for, even if it has swung lower, I'd look for a more sustained move to go test, 87 to 86. Anywhere below there, it can swing outside of the weekly, essentially 84 to 86, and then you can even rope in 83.5. And as long as it's trading above there, it's probably, going to stick inside the weeklies here. If it heads to the downside, anywhere below, 83.5 to 84, and we can start entertaining trips down to 80 to the next weekly close at 78. Anywhere below there, we're looking mid 70s at 74, 420, 69 here on spot. So not anything too crazy. Now let's go ahead into the weekly and take a look. Bitcoin's right around that lower first standard deviation, and what you do need to pay attention to here is that after getting an expansion down, quite often what we'll see is a retest of the lower second. So we had the compression up here, we had the expansion through all the supports here, and getting below that lower second standard deviation, thus kicking off that expansion phase for the weekly. A lot of times what we'll find is that we get a retest of that lower second standard deviation, and that's right around $78,000. That will, after this weekend's close, be under. Typically, we don't see continuing expansion. Usually that will start to govern once we get that mean reversion, which we've gotten essentially a mean reversion by price going sideways and the basis band headed down, or the 20 simple headed down. Typically you won't see too many closes, or maybe you'll get a close below the lower second, wherever that does end up. Like it's right at 78 at that weekly close right here, but it will be under. But typically you'll get a retest of that, and then we'll get a more sustained move back towards wherever the basis is. And thus far, that's where I'm saying, we're in for a weekly move, possibly a sustained move up. And it's just a matter of, does it come from here or does it come from lower? And essentially a retest of wherever the lower second comes in, usually confluent with support and resistance zones of interest. So in this case, approaching this area from the support side. When looking at, a stochastic momentum indicator, it's pretty bottomed out, but it can stay down here for an extended period of time. This is measuring close over close price momentum, which is sideways, and it's sideways within the context of being in the extreme zone, or the oversold zone in this case. So just like it can stay in the overbought zone for quite some time, this is in the oversold zone, and it's spent some time there. So now it's just a matter of, do we see this start to head back up? And realistically, what's that going to look like? What condition would need to be met? In this case, a close back above 94,640, or this week's high at 95 or so, would do it. And then we're targeting, in the lower term timeframes, like the daily, that 96 to 98, 98 to 101, and possibly a push up. So that'd be essentially POC to the bottom side of this weekly, which is this weekly over here. And then possibly, if it does come out the top side towards that basis, which is likely going to end up right at around 100,000 to 100,001, either inside of this weekly low side structure here, which is a higher low, or just skating across the top at 101 there. And that's kind of what I'd be on the lookout for. And there's not too much else to say here. It's not very exciting right now unless you're actually trading in some of the lower term time frames, which there has been some opportunities, and then even then it's getting kind of boring. So traders like myself are looking elsewhere at other assets or other cryptos and stuff like that to trade, which I don't typically talk about here. But let's go ahead and take a look at a few other things. Let's take a look at commodities. Still a hot topic. Gold at 45.09. Coming down to the basis here on the daily, getting a nice bounce all the way back up and sitting above the upper first standard deviation, which does mean that if it is going to continue up with this nice swing higher low and higher low structure now, 45.50 is in the cards, 45.60 right by the highs and potentially higher. But I do think, it's getting close to likely needing a larger correction on a longer term time frame, but that doesn't bar it, trying for like even higher up towards 4600, 4650 by the upper third. But it's starting to get towards extremes. Let's see, what do we got? Yeah, honestly, it's the critical zone. That'd be about 79 to 80. Yeah, I don't know. I would say that, $5,000 I've seen quite a bit. It is possible from here, but I think that it would be a grind to get there. I think more short term, sitting at the 45.33 on the close open right near the 2414, and then possibly swinging above to hit, 45.50, 4600, maybe even 46.50 is fair game from here, as long as this low is held at around 4400 to the 4450 area. So 4400 to 4450. As long as that's being held up, the opportunity for price to keep appreciating to the upside here is on the table, and it's very, very clear. The setup is very, very clear here. From the weekly standpoint, though, I do think that, a larger correction is fair game, and you can see that the upper second, right around that 4640, 4650 area, fair game. And if it does want to push up to the $5,000 area, that is where the upper third is currently at. So it is viable on the table here, and realistically, in the local area, 4,400 is going to be kind of the inflection point. I think for a larger correction, if it starts to breach that on the daily, then we have to look to the weekly at around that 42.75, and if that's dropped, we're looking at a larger correction back down towards 4,000, 4,100 or so. Basis band to the 272. In this case, the 272. Looking at silver, we'll start with the weekly here. Silver headed back up to the highs. As I mentioned, it can play the highs for quite a bit longer. I think, above 80, above 83.75, you can look 85 to 88 up here, and then 90s on deck for the weekly, possibly even a swing above there into the low 90s. Could it go for 100? Sure. It can keep grinding its way up there to 100. It is getting closer, I think, to a larger correction in longer term time frames, like a weekly here. It's at extremes. So I would expect it to, while it can chop around and even make new higher highs, I think that there is a larger correction for price action here on silver on deck. When looking at the daily, this is a consolidation at the highs. There is a higher low in place up here. I'd watch very closely the highs, though, around that 83.75. If it can get above it, we can look 85 to 88 up here, possibly swing towards 90 by that upper third. And then, we could see a move towards that 98 to $100. Now the criteria is going to be, though, holding this zone at this last higher low between $76, almost $77 to that 73.85. If that is dropped, then look right back to 70. And as long as it's trading above 70, it has the opportunity for further upside. But I still do believe probably sooner rather than later, we're looking at a wider correction on the weekly. That doesn't mean that this is over and the top is in, either for gold or silver. It's just that I'd be looking for a wider correction and then kind of see where things come in from there. When looking at traditional markets, we've got strength in traditional markets still. We got nice higher low structure in Dow. And again, this is going to be expansion. Now, this is kind of a grind sideways and up. On closes above the upper second here and around 49,621, we can start to eye towards that upper third standard deviation, kind of a price replace band, because this will move up towards almost 50,000. And that's going to be contingent on holding this last low at 48.8 essentially. If that's dropped, then and I would say dropped on a close. 48.7, 48.750 area by the highs here is fair game. Back to the basis and realistically above the 48.5, 48.4 to 48.5 region. It's looking good. Even if it were to drop all the way down to 48,000, it's still, while it would be pretty violent, you'd see a lot of headlines about it. For structure, it doesn't really make a dent on the bearish side of things until it was dropped. If it started to drop and then we saw the weekly really putting in high side structure, then it becomes interesting. But right now it's sideways and up is the name of the game until proven otherwise. Yeah, so 40. Yeah, we're getting weekly, possibly weekly re-expansion with 50,500 to 50,600 on deck. If we do get volatility expansion. And, it's kind of same thing as gold and silver can still grind the highs. Not really looking for like a big correction here just yet. It's not really in danger of doing that yet, although the warning signs are going to be below, that daily area that I was just talking about here. It's going to be right around that 48,875 for Dow. And that would be kind of where things get interesting, right? Because it was paint a high and then right into higher low structure here. And then, 48.5 fair game to the downside, and then 48,000. And even if it were to be a larger drop like that on Dow, it's not anything too crazy, like I was saying. So, NDX, we've got, still that overhead area of interest, the 25,800 to 830 area. Anywhere above there, we're starting to look to 25,9 to 25,950. And for price action here, it's all about maintaining that basis, which I called out the other day. We got that strike on Thursday down to the basis and then right back up to the top side. And realistically, sticking above 25.2 to around 25.1, even 25,000, nothing too crazy. Anything below there, we're looking at, of course, a larger correction. Anything above here, we're, like I said, 25,950, 26K fair game. And then likely back to the highs around 26.1 to 26.2 on expansion. And then it's about breaking those highs to actually continue to get expansion towards, the 26,500 area and above. From the weekly standpoint, this is a consolidation. And it's been a long week. Forgive my voice here. And, above 25,000, 25,100, looking fine on the weekly. It's all about breaking that 25,835 here, 25,9, and starting to push up towards the highs where the upper second is. And it's just a grind at that point after this really, well, quite frankly, this mid-December buyback that was really, really pretty. And was signaling that this was going to stick up here for a little bit longer. We have SPY or SPX or whatever you want to use. In this case, SPY, brand new all-time high. This is on the march yet again. Now, we did get our 695 target hit, I believe. Yes, we did. Now it's all about 700 or 7,000. Now, futures did hit that, but it's all about, the actual index hitting that. And then anywhere above there, we're starting to look towards 705 to 710 pretty quickly thereafter, in my opinion. Yeah, because the daily's in compression here, and although it's getting slight expansion to the upside, it's not really kicked off just yet, and that's going to occur on any closes above 687. It can drop to 685, but it needs to get bought back up above 687, 688 to stick up here and continue marching. And realistically, nothing crazy above 680, like I've been saying. 670, 679, 680. Nothing very concerning here. And it's just kind of sideways and up is the name of the game. You can see that 685 is a weekly area of interest. This is going to continue to move up, probably to 688. And if we do start to drop around 679 to 680, that's where we can entertain a move back down to this swing where the basis band is, and at the 670 to 675 region. Larger moves down would be, really looking towards the 665, 660 area down here, like we've been talking about. But from here, until the move actually is on the daily, it's sideways and up is the name of the game. Now I know a lot of people are looking at traditional markets, be like they're still plumbing the highs, and we've got commodities back at the highs. We even had a bounce on oil and like everything else, and realistically, looking at Bitcoin and going, why is it underperforming? Why is it underperforming? Well, I've laid out the case a bit about what my opinion is as to why. And I'm going to just quickly touch on that for just a moment. And this is all about the cohorts. And you really need to understand that it's a tale of two markets. You've got, the just shy of 20 million, coins out there, right? And 19.96 million in circulation. But it's all about the cohorts and how you want to aggregate them. And for free float supply, we're looking at about 6 million. Now this is from the end of last year, this report that I pulled up, and that I'm pulling up here. And it's a derivative of a report that I deliver outside of the internet stuff. But what you got to understand is we've got, in terms of free float supply, that's considered like the most active supply on the move. We've got our cohorts here for, long-term holders, lost coins, DATs, governments, that really aren't active, right? Like long-term holders they get active, right? But they're not like actively traded supply on the buy and sell side. The most active cohorts are going to be your native exchanges, which is right around the 2.7, anywhere from 2.4 to 2.7. It depends on how much is flowing to those exchanges in and out. Miners that have 1.8 million coins, which traditionally that's not U.S. miners, right? We're not talking about publicly traded mining companies. We're talking about mining wallets, where we can very easily track from the Coinbase transaction, which is in the first block of a new, it's the first transaction in a new block. So we can track kind of where things go, and we have a lot of history for this, and you can track where that then goes from there. Miner wallet gets paid out, and then we can track from there where things go. And we know that globally, miner wallets hold and regularly send and receive coins to and from the native exchanges. They're one of the most active cohorts, right? Of course, then you have short-term holders that are very active. You have spot ETFs, which are very active. They hold about 1.3. This was, of course, at the time that this data was aggregated, it was 1.37. Now it's just under 1.3 million. And then you've got DeFi and a bunch of other stuff. Now, realistically, understanding the flows between the two major markets, it comes down to native exchanges and the spot ETFs, right? Those are the most active, where you're going to see the inflows and outflows, right? And it's a tale of two worlds, right? And I know that many are on the side of this is fully run by Wall Street and all this. No, it's not. I'm sorry. It's just not. That's just not the truth. The truth is that, if you're going to take an aggregate of all the long-term holders hold more than half of the supply of Bitcoin. And, DATs, right? Like everybody makes a big deal about they're accumulating. They're not actively buying and selling, right? When you're looking at the two biggest marketplaces for active buying and selling, you're looking at inflows and outflows to the spot ETFs, which then have the creation and redemption process through the AP, who's responsible for backing those shares. And then you have the native exchanges, the native crypto exchanges, and that is really a tale of two worlds where you can get into what does the leverage stack look like, and of course you got CME in there with about almost 9 billion in open interest, but then you've got market over on the native exchanges where there's about $41 billion in open interest on Bitcoin, and then you've got the ETFs side of things, which is about 40 billion, right? And it's two different worlds, right? And they operate differently, right? And there's not even a one-to-one analogous, because the contracts on the native exchanges is primarily dominated by perpetual futures. Perpetuals and are contracts that don't have an X date, right? And then you've got some futures, but that's like a very minimal amount of contracts for open interest on the native exchanges. And then you have rolling expirations on the other side, right? And then you've got long tail options and stuff like that. So look, it's one of these things of like, we're in a market where the OGs do really control things still to this day. And the OGs like to move with the miners. The miners, are actively, you can see this chart just, even in yesterday's, 7.8 thousand Bitcoin sent to exchanges for outflows. But then they also have inflows right on the other side of that. That doesn't mean that all of it's being sold. And there's different reasons for the inflows from exchanges to miners, right? So we can, actually aggregate and figure out what the net outflow and inflow is and all that kind of stuff. But you're essentially looking at one of the biggest cohorts that is very active being miners, that is trackable. And then you have short-term holders, you've got whales, you've got long-term holders. And really, miners are reactive to price because they have businesses that they're operating in terms of mining. And primarily, many think of them as just the sell side because of the emissions. But they have a fat stack, and long-term holders tend to move with them. And it's not any one player. I'm not saying that miners are the primary reason. I'm not saying that long-term holders are the primary reason, or the traditional market players, these institutions, are the primary movers on price. It is the global market. And, everybody is price sensitive, right? DATs are accumulating. Many long-term holders are still accumulating at specific levels and then distributing at others. And when hunting for the reasons why, and I think that's less stress if you're going to monitor this stuff just to understand where what the flows are, like, keeping an eye on, okay, well, we've got a bunch of outflows, coming into the actual lows is when we saw miners selling off very heavily. Why? Because price broke below. You had a bunch of sell side pressure, a bunch of open interest being wiped out to the downside. Miners had transferred and were selling into that because hash rate was rolling over, right? And they've got, still 1.8 million coins, right? So that exacerbated the sell side pressure. Right. We also saw outflows at the same time coming from the ETF side when markets resumed. Right. And it's not, my point about this stuff is that you do need to understand the lay of the land. Like, if you're going to play in this playground and you want to make assumptions about, and a thesis about the why, you got to understand that it's a multifaceted why. It's an interplay between the traditional market institutional players and the spot ETFs and the leverage over there, and the native crypto exchanges and the leverage over there. Because over a weekend, when you have a big leverage washout, what happened that Monday when markets opened again? Well, you saw big outflows from the ETF side. And that's just how the market works. It's not like any one malicious player is controlling the market and like they've got bad intention. No, this is just how the market works. And a lot of if you got size, you can move, whether you got size on the cash side or whether you got size on the coin side. And if you got enough size, you can move the market. And other participants in the market have to respond. So understand that it's not really about the on. I did bring up oil here. Oil bouncing off that 55 level on the weekly here. It actually looks like it wants to head up, but it's we're really looking 60 to possibly 65 if it starts to break above around 62.60. Um, maybe even 70 if it starts to really crack above 65 with some strength. But for Bitcoin, uh, I guess the biggest thing is to understand, don't stress about the who's, the what's, the where's, the why's. Um, don't go searching for a boogeyman, because you'll find different boogeymen everywhere you look, and it's all going to be subjective. If you want to watch price action and you're just an investor, understand that you probably want cheaper sats, right? So when price is down, if you're going to accumulate for the long term and your horizon is less than, if it's less than 6 months, stay out of this, right? But if you're looking for the next, 4 to 6 years or 10 years or 20 years, these prices are all attractive here and lower, right? And it's an easy thing for me to say, and and the easiest thing to do is just buy Bitcoin, whatever the price is, just buy it and ignore the price. And if you're going to be holding long term, and if you're in this for the long game, if you're in it for the short game, you better learn to trade. All right, that's all I got for you today, and I'll be back here on Monday, of course, giving my opinion on what's happening in price action and trying to provide some context and possible direction for where things are going. And I hope you enjoyed it. I hope you like and share this out there, and I'll talk to you then on Monday. You have a wonderful morning, afternoon, and evening, no matter where you are in the world. Please trade safe. And of course, as always, stay safe. With all of that being said, Landy out. Have a great weekend.